It's important to recognize that we are not starting afresh. DHL has been present in the country for a long while. I would argue nobody serves India like DHL does in the logistics space. Our presence is not only through our own brand, but also through Blue Dart, a subsidiary that we have here, the leading national express provider. But we want to double down on that, and that's for two reasons. We are positive about the domestic market, it having strong intrinsic growth, but we also see the geopolitical scenario. We see that our customers increasingly look at India as a manufacturing location for the world, and that drives demand for logistics. Now, specifically to the question, where do we want to invest? We want to enhance our warehousing footprint. We already have about 20 million square foot of warehousing space. We want to provide more capacity, but we also want to provide more capability. We recently, for instance, opened a pharma hub, so a specific site, cold chain logistics for the pharmaceutical space. So these are the type of investments that you will see more of in our supply chain business that has warehousing and distribution for our customers. But it's also on the Blue Dart side. Blue Dart benefits from the e-commerce trends. We are the premium carrier in that space. And we also see with road infrastructure improving a great opportunity to do more on surface transportation, and that's why we invest in ground hubs particularly. We have done some already, but that infrastructure needs to continue to grow to provide us with capacity. The third area I would mention is the international connectivity. We have good gateways in the countries, but we want to strengthen that. We want to enhance the connectivity that India has with the rest of the world. So these are specific focus areas where that 1 billion euros of incremental investment will go.
Right, and you've mentioned that India stands to gain with the entire, global tariff tussle in a way as well. But what are the early signs of this you're seeing? Are we seeing contracts being signed, and how permanent do you think this shift is? Or do you feel like once the US-China relations sort of thaw a little bit, will you see some movement going back into China as well?
Well, I do think that listening to our customers, the manufacturing companies, there is a permanent shift. People are recognizing the overdependence on one location is not good for their business, and it's also not needed anymore. That being driven by a wage incremental that you also increasingly see between China and some other countries here in Asia. So there is I think, irreversible trend as it relates to the diversification of supply chains. But there will still be global supply chains. The tech manufacturing, high-tech manufacturing in general, also in the medical space, pharmaceuticals, medical devices, that will not happen in every country. So we will see manufacturing networks where our customers, manufacturing companies, are increasingly looking at India because it's a significant market in its own right. But I can base on that and leverage the capabilities that I have also to supply other parts of the world that not only being traditionally strong markets like the US and Europe, but also the Middle East, Africa, and other Asian countries.